Hey everyone, it's Mortgage Mel and it's time for today's Mortgage Minute Realtor Edition. Today I wanted to talk to you about something that came up this week with one of my customers. They were concerned about the servicing of the loan. When they got their documentation, and it's interesting because it was the second set of disclosures that they got. One was for a deal that didn't go through, and the second one is the current deal. And the disclosures do say that we won't be servicing the loan at A+. So it's like 9:30 at night, and I'm getting these texts from this borrower because he didn't want to sign this based on the servicing changing hands. But it is industry standard for most direct lenders to transfer the servicing to some investor. This is exactly how when I tell you that I'm checking prices with different people who are basically bidding for that particular loan. Then we sell those loans in batches or groups of loans to those investors. And A+ does hundreds of millions of dollars with each of our investors each month. That does give us a lot of pull when it comes to after closing, when somebody has an issue with their servicer. Am I able to help? And the answer is absolutely yes. I did that a bunch of times this past year with people I had closed loans with that had questions about their taxes, questions about their escrows. And I did contact the servicer in the background to obtain some more help for them. So it's not that we leave people alone and they aren't getting support from A+, but we don't have the online footprint and staffing to do all of the servicing. And more money to lend is created by selling these packages of loans. There are exceptions. For example, if there is a local bank or let's say a credit union and they have an in-house special, maybe they have an adjustable rate mortgage special going on, they're typically going to do the servicing on their own. However, they are going to sell at least a proportion of those loans. And interestingly, places like Wells Fargo have actually given most of that away. They're no longer servicing loans. It's really costly. What I do typically when one of my customers has closed a loan, after the loan gets shipped to the investor, I get a notification, as does the customer. And once I see that happen, I send them all of the information for that investor. So for example, if we were using Mr. Cooper, I will send them how to sign up on Mr. Cooper's website with the exact link that they're going to need to make it easy. I don't want anybody struggling to do this. It should be really, really easy for them. So, and in the background, I'm always here for them if they ever have questions or concerns. But it is the industry standard, and I think it's important for everyone to know that that is going to happen with a lot of different banks and direct lenders. Now, if your customer is working with a mortgage broker, that broker is already using an external company. So that external company is likely also to sell that loan to create more money to lend for the next loans. And in some cases, I've actually seen some of those where they've changed hands more than 3 times in a year. That typically does not happen because we're using really large servicers that typically keep these loans for the long term. So I hope that helps kind of give you a little bit more of an idea. If you guys do have any questions about servicing and how that happens, I'm happy to go over it with you. If you want me to come to your office and talk to you guys about it, or if you have any other questions, please let me know. Here's my number above, and I hope you have a great weekend.